Hi, it's Rob Hall from RKH Business Advisory Services. Today, for those of you who are starting your business in Canada, a couple suggestions might help you out. One is get yourself a cash flow model. It's a 13-week cash flow model. Get them on the web. They're everywhere. So what they do is they help you forecast your disbursements and cash coming in over 13 weeks so you can get a handle on that and make sure that you're always liquid. And two, you really want to get your mind around the taxes that you're going to have to pay. You'll find that taxes in year one are less in the number of times you have to pay them in year two and year three. So I put a little presentation together just to show you what that kind of looks like over time so you don't get surprised and you can plan your cash. A lot of people tend to run out of cash in year two because of the expenses that are accrued in year one but don't show up to year two. So I'm going to share this with you, and hopefully this will help you get your mind around it and do some solid planning for the years to come, and then your business will be successful. So let me get out of the way of the camera and get it set up for the presentation, and we'll take it from there. All right, here we go. Indicative model, not advice, not going to be necessarily 100% of what you experience, but give you a pretty good idea of what things are going to look like in terms of reasonableness. Consulting a client or CRA, provincial tax authorities, to get some 100% advice on this. So let's just kind of take a look at what things may look like for you. Year one, let's assume a January start. You can start your business any month, but let's just, for ease of this, we'll go January 1 and you'll see why later. So payroll, starting in year one, starting in month one, you've got payroll, but you do not pay tax on the payroll till the following month. So that goes through the full year. Make the payroll, pay the tax, make the payroll, pay the tax, all the way through. So you got 11 payments in the first year for payroll. Now, if you're selling PST goods, the things that are tangible, you'll have the same idea. Make your sales in the first month, pay the following month, pay, all the way through. So you have payroll and PST, you've got a total of 22 payments in your first year. And then GST, and GST works on a quarterly basis, so, or at least mine does. 1, 2, 3 months collect, 4th month pay, 4, 5, 6 sales and collects, 7 month pay, 7, 8, 9 pay, and 10. So that's what your first year looks like. So there you go. You got 25 tax payments to consider potentially in your first year. Now in the second year, I'm going to populate the first year ones just to make it easy. There's your 25 payments. Now in the second year, you're paying your payroll in month 13th or January based on December of the first year. So you've got an extra payroll payment in year two compared to year one, an extra PST payment, and you're going to get an extra GST payment for month 10, 11, and 12. So there you go, 3 extra payments right there. Now also, because you've closed your first year of business after the first 12 months, you have to pay corporate tax if you're making some money. So hopefully you're paying corporate tax. And that has to happen anywhere in the first 6 months following your year-end close. So no later than if we're January, June 30th, but anytime in here, you can pay your corporate tax. So consider that another disbursement coming out of the company. On top of that, your personal tax. Assuming you're a very small business and your personal income is tied to your business, you're probably pulling money out or potentially pulling money out for your personal expenses. So there's another payment. So you've got 5 extra payments in year two that you have to manage from your cash flow. So potentially a good idea is to have separate accounts for these just to keep track of them and not think that you have more cash on hand than you actually do. So that's year two. So let's head to year three. So year three, we've again populated all those. Your 12 payrolls, 12 PSTs, 4 GSTs, 1 corporate by June and 1 personal by April. So assuming on the personal perspective that you've paid $3,000 or more for 2 years in a row, you're going to have to make installment payments. So the government wants their money on the 30th month, the 6th month of the year, June and August and December, and there will be a wraparound in here when you're into the next year for March. So you have a 4th one there. So just to contrast and compare, first year, this is what your payments look like, but you haven't set into a full cadence yet. 4th year, that's what it looks like. First year, 4th year. So you can see potentially you have up to nine more payments. You definitely have these payments and potentially those 4 extra installment payments. So Now, hopefully that model there will just show you the things that you're going to experience and help you plan your cash flow going forward. If you need a copy of it, I mean, it's obviously easy to duplicate, but I could just send you a picture of it. But keep that in mind. A lot of companies struggle in the second year because they haven't considered all the taxes they have to pay: corporate tax, personal tax, the wraparound on the GST, and potential installment taxes. That's where they get into trouble from a cash flow perspective. So if you keep that in mind, what year one looks like and how it builds to year four, you're probably in pretty good shape from a disbursements management perspective. So there you go. Have a great day and have a great business. Take care.